President Trump says he wants to ease the burden of credit card debt, but his latest moves could have ripple effects. First, Trump called on credit card companies to cap interest rates at 10% for a year. That's far below today's average of around 20%. Now he's also going after the fees merchants pay every time a consumer taps or swipes their card, backing a proposal in Congress to increase competition among payment networks. JPMorgan Chase is pushing back, warning that changes could significantly disrupt its business and hurt both the bank and its customers. It's unclear whether or not Trump actually has the power to enforce that, but the message still spooked investors and sent shares of major banks and credit card-related firms lower. Credit card debt has been climbing as everyday costs stay high, and many people rely on plastic to cover surprise expenses. In 2024, the average annual percentage rate, also known as APR, reached 25.2% for general purpose cards and 31.3% for private label credit cards, the highest levels since at least 2015. While lower interest rates sound like a win for consumers, experts warn the move could backfire. Banks could respond by cutting off riskier borrowers, raising fees, or increasing minimum payments, making credit even harder to get for the very people this policy is meant to help. This push comes as the Trump administration tries to show voters it can rein in the cost of living ahead of the midterms. Lawmakers from both parties have floated similar ideas before, but banks have long pushed back. For now, Trump has set a January 20 deadline and says that lenders would be quote-unquote breaking the law if they don't comply, though he hasn't yet explained what that law would be.